Good morning and welcome to the ADS Securities Markets Update. We'll start today again with a look at the major developments in the US yesterday before going forward with a preview of the day ahead. First of all, the entire economic releases from the US yesterday came in with a disappointment, beginning with the housing figures, including the building permits in addition to the housing starts, also going forward with the PPI, or the producer price index, and the core producer price index also, which basically surprised with a record decline not seen since 2009, and the capacity utilization rate also came in with came in stable at 79.4, while the estimates were to rise towards 79.9. And finally, and most importantly, we had also the industrial production, which basically increased by only by 0.2%, while the estimates were to rise by 0.5%. And most importantly, again, December's reading has been revised down even lower toward minus 0.3%, which or instead of minus 0.1, which means that the major central banks are likely, or the major banks are likely, to cut the Q4 GDP for 2014, the estimates for 2014, in addition to Q1 GDP of this year as well. Going forward to the key events yesterday, or the key event yesterday is basically the Federal Reserve surprised the markets again with a total dovish tone, while the markets was waiting for more hawkish tone regarding a sooner rate hike, especially in June meeting. The key sentences for yesterday is basically for the minutes. We had many Fed officials prefers to keep the interest rate lower for longer, or at zero rate for longer, and many also still judged the foreign situation as a downside risk, and this has turned the market upside down. First of all, the US dollar tumbled with crude oil, while the equities, gold and silver has rallied following the release. At ADS, or in ADS Securities, as we were well prepared for this surprise, and we noted also that the Federal Reserve will retreat at some point from raising interest rates this year, or at least until the end of the first half of this year. And you can always go back to our previous reports on adss.com. In the meantime, we will keep watching the upcoming events upcoming data and events from the US, which we believe that it will continue to weaken further. On the final note, in February, 88% of the US data came in with a disappointment, while only 12% came in with a positive outcomes. As for the Asian session today, we had only few economic releases from New Zealand and Japan, which had also notable impact on the market. But first of all, beginning with New Zealand, we had the PPI, or the quarterly PPI input, which basically fell more than expected, declining by 0.4% in Q4, comparing to another decline of 1.5% in Q3 of last year, while the estimates have been anticipated to decline by 0.2%. This is also the third quarterly decline in a row not seen on a record. In Japan, the trade balance deficit also came in much better than expected, because the deficit narrowed toward 0.41 trillion yen in January, down from minus 0.62 trillion yen in December of last year, while the estimates were to widen further toward minus 0.95 trillion yen. And this is the lowest deficit since June of 2012, when the deficit was around minus 0.36 trillion yen. As for the European and the US session ahead, there are only few economic releases across the day, while all eyes will remain on Greece. Yesterday, the ECB extended emergency liquidity to the Greek banks for another 2 weeks. In addition, the Greek government is expected to submit a request for loan extension later today, which would ease the speculation or the fears about the Greek exit anytime soon. The key events for today, or basically that we will be watching for today, is as follows. First of all, the Swiss trade balance. We will have also during the European session, we'll be waiting for the Eurozone current account surplus, in addition to the UK CBI industrial order expectation. However, the most important data will be again from the US. The jobless claims is expected to go higher, to decline below 300,000 back to 293,000. However, we believe that it might continue to trade, or might continue to be, or to remain above 300,000. Moreover, the Philadelphia Fed Manufacturing Index is also expected to rise again toward 8.8%, up from 6.3 during the month of February. However, this might disappoint as well. On a final note, we have 3 charts for today to talk about in terms of technical analysis. Beginning with West Texas Crude Oil, first of all, we will have, so far, it is the same pattern all over again. We have a triple top on the 4-hour chart, which basically the stops are triggered, or stops are reported well above 54.40s. And so far we have also the same pattern on the technical analysis. Is basically it was overbought at the beginning of February, or 3rd of February. It was also overbought. at 9th of February, and right now it was like a few days ago on the 19th or the 18th and 19th it was also oversold, and yesterday we went back down to 50.60. So far as the triple top remains in place with also lower highs, we expect more and more declines ahead during the next few days, and right now we'll be waiting for the $50 barrier, which is likely to hold for some time, but at the end of the day the outlook remain negative. Going forward to the next chart, we have the Kiwi. Yesterday, as we noted in our also video, that we are looking at two levels basically, or the selling area is between 0.7533 and 76.18. Yesterday we went up to also at the beginning of the day, went up also to 75.55, and then we declined by more than 60 pips. However, the Fed decision led to another rally well above 75.60s. However, we will continue to wait the 76.18 before the buyers start to appear. Finally, gold is the same pattern, the same chart. There's no change so far. Yesterday we declined the whole day toward almost below 1200, reaching as low as 1298. However, after the Federal Reserve release, the gold rallied again because of the Federal Reserve, or because of the dovish tone from the Federal Reserve, with no rate hikes anytime soon so far. So right now, yesterday we tested two levels. We have the trend line here from from November's low until January's high, which basically stands at the same level of the 61.8% retracement, which is 1199, or almost like 1200. So far we will be waiting at these levels right now to look at on the upside view today, which is at 1215 in addition to 1230. These are the next two levels to watch in gold. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economical reports and analysis. Thank you for watching.